Hello, I'm Mark Baycroft, a director in the tax consultancy team at Markel Tax, specializing in owner managed businesses. And I'm here to talk today about tax support available to small and medium enterprises during the COVID-19 outbreak. Going to talk about four things today: support for employers and employees, support for the self-employed, help with business costs, and deferral of tax payments. And when I say support, this is where the tax system is effectively being reverse engineered to make grant payments to or for the benefit of employers, employees, and the self employed, whereas help with business costs is more to do with grants and loans that help directly with costs that a business will incur on an ongoing basis. The first scheme that was announced out of the employed and self-employed scheme was the coronavirus job retention scheme, and this is available to any UK employer organisation which was running a PAYE payroll on the 28th of February 2020. So this is not just restricted to small and medium enterprises, this is all UK employer organisations. And this is taxable grant funding for employees who were placed on furlough, which is paid leave where no work is actually performed for at least 3 weeks. So an important point here is employees put on reduced hours do not qualify. So if you have a choice between placing one employee on furlough and one employee working full time, or placing both of those employees on part time, and you want to qualify for this scheme, then you have to place one employee on the furlough and keep the other working. The start of this has been backdated to the 1st of March, and the government have said it will last for at least 3 months. Now, there are currently no details of the application process, but details are expected by the end of April 2020. I should say at this point as well that all of this is based on government announcements to date, because there are actually currently no formal details of how the scheme will be operated in writing. And obviously, some questions remain unanswered, and we will come on to those in the next couple of slides. In terms of what you can claim for under this, the grant amount is capped at the lower of 80% of monthly salary and £2,500. So if your monthly salary is less than £2,500, you will be paid less than, or the grant will be less than £2,500. Whereas if your monthly salary is much more than £2,500, the £2,500 cap will operate. The grant also includes employers' national insurance contributions and the minimum auto-enrolment employer pension contributions for that employee based on that amount of salary. For those employees who are not on a fixed monthly salary, average earnings can be used. For employees whose pay varies, this will be the average for the 1920 tax year. The monthly payroll is run in the normal way, so this is actually a grant to support the payroll cost. It is not a cap on the amount that an employee can be paid, it's a cap on the amount that the government will assist. And employment law still applies to all decisions around furlough and reduction of pay. So your employees will need to agree that they will take 80% if you're intending only to pay them that. Otherwise, it's a case of the government will fund 80%, but you have to continue to pay them their full pay. And if you're going to decide to place certain employees on furlough, you obviously have to abide by employment law, and you cannot just discriminate against which employees will go on furlough and which will not. Further conditions for the scheme. The employer must have had a PAYE scheme which commenced prior to and was operating on the 28th of February 2020. The employees placed on furlough must have been on the PAYE payroll at the 28th of February 2020. The employer must have a UK bank account, and the employee must not undertake work whilst on furlough. So you cannot now create a payroll and qualify under this scheme. That payroll must have existed at the 28th of February 2020. The employees must have been working at 28th of February 2020. So you cannot have a situation where you placed employees on unpaid leave before that date and now you want to re-employ them. But employees who have been made redundant after that date can be re-engaged and placed on furlough. And the government have also announced, and I believe this has been reported by the BBC, that employees who change jobs after the 28th of February 2020 can then go back to their old employer and say, please re-engage me and put me on furlough. There is no detail of that at the moment. It's certainly not been put in any of the written documentation that has been released, but that has been reported by at least 2 outlets, I believe. So I suspect that when we get the full written details, we may find that there are slightly more opportunities than perhaps there appear to be at the moment. The statutory sick pay changes, which, as I say, were the first changes that were actually announced, SSP will be payable from day 1 of sickness rather than day 4. This, I believe, was to encourage employees who should be self-isolating to self-isolate as quickly as possible. SSP does remain a statutory minimum, so employers can continue to pay full pay in line with their employment policy. And what this grant will actually cover is an SSP rebate for up to 2 weeks for UK-based SMEs, the definition of which has not been fully published, but includes having less than 250 employees at the 28th of February 2020. And again, as with the coronavirus job retention scheme, the process for rebates is still in the process of being developed. So this will be money that will be repaid to SMEs in due course. Support for the self-employed. Following on from the coronavirus job retention scheme is the self-employed income support scheme, which the overall aim is very similar to that for employees. It is to provide support for the self-employed to similar levels. It's available to self-employed individuals, which includes members of partnerships. As with the job retention scheme, it is a taxable grant. This time, the funding is for reduced trading profits instead of employee costs. But in both cases, it's as a result of COVID-19. It will initially be open for a 3-month period, as with the job retention scheme. But presumably, if lockdown lasts for longer than 3 months, then these schemes will be extended accordingly. And again, there are currently no details of the application process, but HMRC will contact those affected and invite them to apply. This is expected to be by the beginning of June 2020. As with the job retention scheme, the grant amount is capped at a lower of 80% of average monthly profits and £2,500. Unlike the job retention scheme, where the average is only over 1 tax year, this average is over 3 tax years: 2016-17, 2017-18, 2018-19. Trading profits must be less than £50,000, and more than 50% of income must be from self-employment. This is starting by looking at the 18-19 tax year, but if you find that your profits are just over £50,000, or you earn slightly less than 50% of your income from self-employment in that year, then you can look at the average of the 3 tax years, 16-17, 17-18, and 18-19 instead. Clearly, if in all those 3 tax years your profits were just over £50,000, unfortunately you will not qualify for this scheme. There is quite a harsh cut-off in some respects, also applies if you became self-employed shortly after the end of the 2018-19 tax year. Again, you will not qualify for this scheme, so you will need to look for support in other ways. The individual to qualify must have submitted their 2018-19 tax return by the 23rd of April 2020. So if you haven't submitted your 18-19 tax return by the original filing deadline of the 31st of January 2020, you still have another couple of weeks to actually file that tax return and still qualify for this scheme. So that 23rd April 2020 date was 4 weeks from the original announcement of this scheme to give people who hadn't filed their tax returns yet time to file them and still qualify. You must have traded in the 2019-20 tax year. You must be trading at the date of application, or would be but for COVID-19. So if you are operating as a self-employed individual running a pub or something like that, obviously you wouldn't be able to qualify or trade now because you have been required to close your business as a result of COVID-19. But you would have been trading but for that. You intend to continue to trade in the 2020-21 tax year, and you have lost trading profits due to COVID-19. Now, again, as with the job retention scheme, we don't have the full details of this scheme yet. So, for example, how they will determine that you lost trading profits due to COVID-19. In some situations, that will probably be easier to identify than others. For example, going back to my pub, if you're closed, it's obvious you're not generating any profits because you're not open. If you're running an online mail order business, then it might be a bit more difficult to say whether you have lost profits or not. Help with business costs. In situations where you have costs that are not covered by the previous two schemes, or in fact also you have a situation where you will not receive payment to help with your employee costs or help with your self-employed costs, because obviously those payments will not be made until sort of May or June time at the earliest. The first port of call, according to the Treasury, is the Coronavirus Business Interruption Loan Scheme, which is where the government will guarantee 80% of loan funding to encourage the high street banks to actually lend. Now, this has actually, end of last week and over the weekend, even I'm recording on Monday, the 6th of April, this has actually gone through a rewrite, and there is now a sort of version 2 of this, because in the original scheme it said that it was a lender of last resort and people should try their high street banks for their normal commercial products first. Unfortunately, what was happening was that the banks were introducing high interest rates on those normal commercial products and asking for personal guarantees. And basically, the amount of lending that was available was not as the Treasury had envisaged. So, version 2 of this scheme, the banks will be required to match to sensible Bank of England lending rates. They will not be able to ask for personal guarantees where the borrowing is under £250,000. And this is no longer a product of last resort. So you won't be able to have to take out any other product that the bank could offer you before you qualify for this funding. You will actually be able to hopefully qualify for this funding as the first product that you are offered when you say to the banks that you need to borrow more or restructure your borrowing as a result of the coronavirus outbreak. It is to be hoped that the banks will respond positively to this, and that the amount of support that will be available or help that will be available will increase as a result. But obviously everybody will be interested to see feedback on that and how it actually goes. The other areas that help is being made directly available is in the area of business rates, or in the case of those who do not pay business rates because they qualify for small business rate relief, direct grant funding. So for all small businesses who qualify for small business rate relief, they will receive a direct cash grant of up to £10,000 to assist them with their business costs in this period. And that's all businesses. There will further be a business rates holiday for retail, hospitality, leisure, and preschool nursery businesses. This is those who do not necessarily qualify for the small business rate relief, but up to rateable values, I think it is, of £50,000, they will actually qualify for a complete reduction, complete exemption from business rates. And also in the retail, hospitality, and leisure sectors, there will be additional cash grants of up to £25,000 for those larger businesses who don't qualify for small business rate relief, but are getting the additional rates holiday specified previously. And finally, on support through the tax system for small and medium enterprises, we have two other areas of interest around deferral of direct tax payments. The self-assessment payments on account due by the 31st of July 2020 can be deferred to the 31st of January 2021 with no interest or penalties. This will be automatic and does not need to be applied for. Hopefully, HMRC's computer systems will have been updated by the 31st of July so that they don't apply interest or penalties. Although do not be surprised if it takes them slightly longer to update the computer systems and the computer generates notices. But they have said that these will not be payable and there will be no interest or penalties for not paying. This actually now applies to all self-assessment taxpayers. It was originally mentioned that it was only going to apply to self-employed individuals, but they've now said it will apply to anybody who has a payment on account during the 31st of July 2020, and they can actually defer that automatically to the 31st of January 2021. The point to watch here, I suppose, is that if you do defer it, you will effectively have two tax payments due in January 2021. So perhaps in terms of cash flow, if you can afford to pay little bits between July and January, it might be better. And finally, HMRC's time to pay service should be utilised where taxpayers are unable to pay their tax debts as they fall due. Now, no specific new guidance has yet been released on this, but the hope, and the professional bodies I understand are also in communication with HMRC on this, is that HMRC staff will be more pragmatic in the current economic climate and will be willing to and more understanding of small and medium enterprises' needs in this period, and will actually be able to negotiate sensible time to pay arrangements for those taxpayers to defer their tax liabilities. One thing that hopefully will come through is that in the past, what has tended to happen is HMRC have asked for a sort of immediate payment followed by an instalment plan. And hopefully it will be realised that asking for an immediate payment at the moment may not be possible. My contact details, if you want to get in touch, are now on the screen. This is obviously a developing area. There will be more guidance issued on both the job retention scheme, the self-employed scheme, and I suspect on the loan scheme as well in due course. And these will obviously go on our website as and when we have them. Thank you.